there has been a substantial recovery in global equities from their March low when most of the global equity markets had hit their rock bottom after the world was assessing the potential impact of the coronavirus situation on global economies as well. But fast forward to July 2020 and you already have the Dow Jones as well as the Nifty that have rallied more than 40% from their March lows as well. But remember, during the first 3 months of the year itself, we had a significant correction as well when the Nifty in fact corrected 40% and from there on has recovered about 40% and currently at near the 200-day moving average. Who would have thought that a couple of months down the line you would have 10,900 or almost 11,000 back on the Nifty as well. Not only that, the Nifty Bank also has recovered smartly, trading above its 100-day moving average. Well, that brings me to a key question that, is there room for more rally in this market? And one of the key indicators that market participants, long-term market participants actually look at is the 200-day moving average. For example, if a security is trading above the 200-day moving average, it is said to be in an uptrend, and the other way around, when a security is below its 200-day moving average, then it is said to be in a downtrend. And with the Nifty very close to the 200-day moving average, let's have a look at how the trend has been of the number of stocks that have been above or below their 200-day moving average. And let me just point out that currently only 38% of the Nifty stocks are above the 200-day moving average, while the Nifty itself is just about 1.5% away from that level. That is in July I'm referring to, but in March when we had hit 7511 on 24th of March, there were less than 10% Nifty stocks that are above their 200-day moving average. So there has been significant recovery, but not almost quite there yet. So what it actually means is that there needs to be more broad-based contribution for the market in order to scale past above the 200-day moving average and maintain levels above that level as well. Let's also address the contribution factor or individual stocks that have contributed since the March low. Of course, Reliance Industries, that has been the top contributor with almost 600 points contributed out of the 3,000 plus points that the Nifty has gained since the March low. HDFC Bank has contributed more than 650 points, while Infosys and HDFC have contributed over 150 points each. TCS, HUL and Kotak Bank contributed about 130 to 150 points each to the rally. Bharti Airtel, ICICI Bank and ITC have contributed over 100 points. So all in all, to summarize, it has been a narrow rally that we have had, at least for the Nifty, because if you have a look at the key takeaways, the top 2 stocks have contributed 30%, the top 5 stocks have contributed 50%, while the top 10 stocks have contributed nearly 66% of the gain that we've had of more than 3,000 points on the Nifty. And that is the reason I'm saying that there needs to be more participation in order for the market to sustain and climb above to previous high levels.